Wall Street did something absolutely insane. A company that generated less than $20 billion in annual revenue, a company that lost more than $4 billion in a single quarter, a company that still isn't consistently profitable, just became worth $2.1 trillion. Let that sink in, SpaceX. A $75 billion IPO, the largest public offering in history. On its first day of trading, the stock opened at $150, surged to $176, and closed at $160.95, a gain of nearly 19% in a single day. Its market value jumped past Broadcom and moved within striking distance of Amazon. Overnight, SpaceX became the sixth largest publicly traded company in America, and Elon Musk crossed a milestone no one in history had ever reached before, the world's first trillionaire. So here is the question. What exactly are investors buying? Because they're clearly not buying the financial statements, they're buying something else. And by the end of this video, you'll understand why Wall Street may not be valuing SpaceX as a rocket company at all. They may be valuing it as the company that builds the next economic frontier. The numbers don't make sense. Let us start with reality. In 2026, SpaceX generated roughly $18.7 billion in revenue. Its market value sits around $2.1 trillion. That gives it a price-to-sales ratio of approximately 112. For comparison, Apple trades around 8 times sales, Microsoft around 13, Nvidia around 25, Amazon around 4. Even Nvidia, the biggest winner of the AI boom, is valued at only a fraction of SpaceX's revenue multiple, and that is where things get weird. Traditional valuation models simply do not support a $2.1 trillion market cap. Morningstar estimates a fair value closer to $780 billion. Other analysts place the company somewhere between $500 billion and $1 trillion. Those are already massive numbers, but $2.1 trillion. That is another universe entirely. If the financials can't explain it, Wall Street must be betting on something much bigger. The real business isn't rockets. Most people hear the word SpaceX and immediately think about rockets, Falcon 9, Dragon, Starship, explosions on YouTube. But many investors believe the most valuable part of SpaceX isn't the rocket business. It is Starlink, and that is a completely different story. As of 2026, Starlink has deployed more than 8,000 satellites into orbit. It serves customers in over 100 countries, and it has quietly become the largest low-Earth orbit internet network ever built. But here is what really matters. Starlink does not operate like an aerospace company. It operates like a telecom company. Rocket launches generate revenue once. Starlink generates revenue every month. Every customer subscription creates recurring cash flow, and Wall Street loves recurring cash flow. That is why software companies often trade at much higher valuations than industrial companies. Predictable revenue is one of the most valuable assets in finance. Many analysts believe Starlink alone could eventually justify a valuation measured in hundreds of billions of dollars, maybe even more. But even then, we're still nowhere near $2.1 trillion. SpaceX owns the launch market. If Starlink provides the cash flow, the launch business provides the moat, and the moat is enormous. Over the last several years, SpaceX has been responsible for more than 80% of global orbital payload mass. Think about that for a moment. Most of what humanity sends into space today goes up on a SpaceX rocket. Not a Chinese rocket, not a European rocket, not a Blue Origin rocket, a SpaceX rocket. And the reason is surprisingly simple. SpaceX solved a problem that nobody else solved at scale: reusability. Before Falcon 9, rockets were treated like disposable products. Launch once, throw away, build another one. Imagine if airlines bought a brand new Boeing 747 for every flight. The economics would be absurd. Yet that is how much of the rocket industry operated. SpaceX changed the equation. Some Falcon 9 boosters have now flown more than 20 times. The company effectively turned rockets into reusable transportation systems. As launch costs collapsed, competitors found themselves trapped. Even Jeff Bezos's Blue Origin still trails far behind in launch cadence and market share. That is why investors don't see SpaceX as another aerospace company. They see it as the dominant infrastructure provider for access to space. And dominant infrastructure businesses often command extraordinary valuations. But once again, not $2.1 trillion. So what are we still missing? SpaceX is becoming strategic infrastructure. Here is something many people underestimate. SpaceX isn't just a commercial company anymore. It is becoming part of America's strategic infrastructure. Today, SpaceX plays a central role in NASA's Artemis lunar program, International Space Station resupply missions, national security satellite launches, Space Force operations, Pentagon contracts, and classified government missions. In many cases, there simply isn't another provider capable of delivering the same combination of reliability, launch frequency, and cost. That matters because governments don't just buy products, they buy certainty. And once a company becomes embedded inside national infrastructure, replacing it becomes extremely difficult. Investors understand this. Long-term government contracts create predictable demand. Government partnerships create stability. Strategic importance creates barriers to competition. That is why many investors are comfortable valuing SpaceX far above traditional aerospace firms. Maybe that gets us to $500 billion, maybe even $1 trillion. But we're still not at $2.1 trillion. So where does the rest come from? The $28.5 trillion dream. This is where the story changes, because now we're leaving the world of current earnings and entering the world of future possibilities. In its public filings, SpaceX highlighted a staggering number, $28.5 trillion. That is the size of the market the company believes it can eventually address. To understand how enormous that is, China's entire GDP is roughly $19 trillion. Germany's economy is less than $5 trillion. SpaceX is effectively telling investors, we believe the future space economy could be larger than some of the world's biggest economies. That future includes satellite internet, orbital logistics, in-space manufacturing, lunar infrastructure, deep space transportation, resource extraction, and eventually, Mars development. Now, traditional analysts hear that and roll their eyes, because much of it doesn't exist yet, but growth investors hear something different. They hear opportunity, because if those markets emerge, who is best positioned to dominate them? The company that already owns the launch vehicles, the satellite network, the engineering talent, and the infrastructure. In other words, SpaceX. This is where valuation starts moving beyond spreadsheets and into vision. The Mars Premium. Now, let's be honest. This is where things start sounding completely insane. 1 million people living on Mars. A self-sustaining Martian civilization. Interplanetary transportation. If someone proposed this 20 years ago, most investors would have laughed them out of the room. Yet Elon Musk continues to insist that making humanity a multiplanetary species is the company's ultimate mission. Not profits, not quarterly earnings. Mars. And surprisingly, some investors are willing to pay for that possibility. Not because they believe it will definitely happen, but because the upside is almost impossible to calculate. Think about it. 20 years ago, many people believed electric cars would never become mainstream. They believed reusable rockets were impossible. They believed satellite internet would never work. Yet Musk helped turn all three into reality. That doesn't mean Mars will succeed, but it does mean investors are less comfortable dismissing the idea outright. And once investors begin assigning value to possibilities rather than probabilities, valuations can rise very quickly. Investors are really buying Elon Inc. There is another explanation becoming increasingly popular on Wall Street. Investors aren't buying SpaceX. They're buying Elon Musk's ecosystem. Today, Musk controls an extraordinary collection of companies: Tesla, SpaceX, xAI, Neuralink, and X. Individually, each company operates in a different industry. Together, they look increasingly interconnected. Tesla brings robotics, autonomy, batteries, and energy systems. xAI brings artificial intelligence. Starlink brings global communications. SpaceX brings transportation beyond Earth. Neuralink explores human-machine interfaces, and X serves as a massive distribution platform. Viewed separately, they're companies. Viewed together, they're an ecosystem. A system that spans transportation, AI, communications, energy, robotics, and eventually space. Some investors believe this ecosystem could become more valuable than any individual company within it. Whether that happens remains uncertain. But the possibility itself adds another layer to the valuation story. The bulls versus the bears. So, who is right? The bulls or the bears? The truth is, both sides have a case. The bears see today's reality. $18.7 billion in revenue, billions in losses, a valuation that appears disconnected from conventional financial metrics. The bulls see something different. Starlink, launch dominance, government contracts, artificial intelligence, the space economy, and potentially Mars. The bears value what exists, the bulls value what could exist, and that is why the debate is so intense, because SpaceX isn't being valued as it is today, it is being valued as it might become. Conclusion. A century ago, investors poured money into railroads. Later, they poured money into automobiles. Then came the internet. Each era had companies that looked wildly overvalued at the time. Some became legends, others became bubbles. Today, Wall Street isn't simply valuing a rocket company. It is placing a bet on the future of space, a future where communication, transportation, manufacturing, energy, and even human settlement expand beyond Earth. Maybe the skeptics are right. Maybe SpaceX is dramatically overvalued. Maybe history will look back on this as one of the largest bubbles ever created. Or maybe we're re-witnessing the early stages of an entirely new economic frontier. Because the real question is not whether SpaceX deserves a $2.1 trillion valuation today. The real question is, what would SpaceX be worth if Elon Musk turns out to be right? And that is a question the market won't answer for another 20 years. This is World Really Works. See you in the next one.